Hi folks, this is the preview for tomorrow. That's the 19th of January 2011. So let's have a look at what happened in today's market. We had the DAX, which wound up, the Dow wound up, the FTSE wound up, oil up, gold up. Perfect correlation. Everything was up. That tells me that there should be a risk appetite going on in the market. So let's see whether the other pairs corresponded. The Aussie JPY up, GBP JPY up, Euro JPY up. Fantastic. Uh, when I say up, I mean the Aussie JPY is up. The JPY component of it is down. That means that the Aussie JPY is up. Similarly, Euro USD, the GBP USD, and USD CHF, all of them were US dollar weak. So the European currencies rose against the US dollar. But coming to the commodity currencies, in normal circumstances, this is what we should be expecting. We should be expecting the US dollar to lose or become weaker against the commodity currencies. However, that wasn't the case. Let's see whether there is some reason behind it. The US dollar CAD has a fundamental reason because we had an interest rate announcement, and there has been a little bit of change in the bank policies in Canada. Let me share with you what I understand. The Bank of Canada feels that there is a lot of household debt going on in the market, and they want to curb that. How are they going to do that? Earlier, your mortgage could be amortized over a 40-year period. That was some years ago. They cut that down to 35. That means if you take a mortgage of, let's say, $300,000 on buying a house, you'd now be able to pay it off only within 35, not 40 years. And now in effect, they've reduced that even further. They've reduced that to 30 years. What that is going to do is it's going to, at least that's what the pundits expect, it's going to slow down the housing market, and it's going to slow down the housing related market. So it could be lumber, it could be new appliances, so on and so forth. So slow down the economy by a notch. And that's one of the reasons why the USD CAD has gone up. So we know the reason why the US dollar component in USD CAD has gone up. There's a reason and a logic behind it. Right now, you need to understand that I'm not agreeing or disagreeing with the logic, but that's what the market anticipates. And I love to trade against the market, the market's anticipation, but at the extreme. I'll go to that in detail later. Now, the Aussie USD reacted just the way it should. The value of the Australian dollar went up, but something's cooking in New Zealand dollar. The New Zealand dollar shouldn't have lost strength. The New Zealand dollar should have gained in strength. So now, it leaves me with a very I'm not too certain in which direction should I trade. As for the euro, I expect euro to continue to go down, but there's risk appetite going on in the market, and the value of the euro can increase further because of that risk appetite. So risk appetite tells me do not short the euros, but the fundamentals in euro itself tell me that the euro is weaker and the euro needs to go down. So it's a predicament which I do not like to be in. However, I think we should concentrate on three pairs. I'll tell you all which three are these. Number one is the New Zealand US dollar. New Zealand US dollar is has come up and is consolidating right now. As long as these highs are not broken, we still in a downtrend, and in that case I want to sell the rallies in the downtrend. So I'll use the 21 SMA trade technique to sell the New Zealand dollar. Now you by now would have you have been made aware of the reason why I chose New Zealand, because the New Zealand dollar is um, acted acted weak on a good run up in the stock and commodity prices. So in case we see any you know, any reason why the commodities or the stocks to go down, we should see a good sell off in the New Zealand US dollar, and that's what I want to take advantage of. So on the New Zealand US dollar, I'm going to use the 21 SMA technique to enter in, and I'm going to enter in at 50% of the retracement. So like on the USD CAD, I've explained in the past to use the 78.6. In New Zealand US dollar, I'll be using the 50% retracement. Then apart from that, let's look at the Euro chart. The Euro chart, I still want to sell. I want to sell these because we're flirting with the resistance right now, and as long as we flirt with the resistance and don't break it, I am in the mood of selling the Euro US dollar. Yes, I know it's against the risk appetite sentiment which is going on in the market right now, but I will be looking to sell the Euro on any rally. So I'd use the 21 SMA technique to get me into the Euro after 2 o'clock. Now let's look at the USD CAD. The USD CAD, I've always maintained that it has a lot of room to go to the downside. Now, we've seen a big update today because of the changes in the mortgage rules and so on and so forth, as proposed by the Bank of Canada. However, I don't buy into the economy, slowing down a bit. Frankly, the Canadian economy is the Canadian dollar is not very intrinsic. That means that local sales or local retail sales or local growth does not fuel the speculation in the Canadian dollar, but it's external factors such as the value of oil, value of commodities, which fuel speculation into buying the Canadian dollar. So though the market is actually expecting a slowdown in the Canadian economy now because of the new rules, I do not see that as a deterrent. I see that as an opportunity to get a good price in the Canadian dollar and short the US dollar CAD pair. So I'll be using the 21 SMA technique after 2 o'clock. That's when European markets open, and I'll be entering it at the 78.6 fib level. So that's about it, guys, for today. Before I forget, let me even share with you all the news which is going to be out. We're going to have news at 4:30. I'm going to update select members with the kind of news trading opportunity I'll see at 4:30, and what to look at. Apart from that, a very important report from Canada is coming up at 10:30. So in all likelihood, I do not want to continue to hold my position in the Canadian dollar after 10 o'clock. Before 10, I'll be out of my position. After 10, I do not want to hold on to my position. And tomorrow is going to be a big day. for uh, for the forex markets, especially because China is going to be announcing its GDP. The Australian dollar has it reacts very well to the way the China's GDP numbers are printed. However, that's at 9 o'clock, so most likely by the end of the day, I'll have the preview for the next day, and I'll have my suggestion on how to trade the Chinese GDP. So that's about it, guys. Talk to you in a bit. Thank you.